Welcome to Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
Hello, welcome to the Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks. This is a secret weapon to protect your assets and never have to start over again financially. Vance, how you doing?
Hello. It's nice to see you again, Seth. And it's great to get back in the saddle and get another podcast for our listeners.
Likewise. Yeah, absolutely. It's exciting. I mean, we've got so much content to share with folks that it's always like trying to take a drink out of a fire hydrant, and us getting people information is always a joy. So today, I think we're going to talk about financial planning versus financial self-reliance. And it's something that people don't often consider, but something that they should, and understand the differences and the pros and the cons. Financial planning is not financial self-reliance, and private banking strategies is not financial planning or simply an investment strategy.
Yeah, that's right. In my former life, when I was doing financial planning, I thought I was independent and working for the client, when in fact, once my eyes were open to private banking, I realized that I was a puppet of government and banks under a strict format or a limited format. And that's why this came out. Not only myself, but past financial planners who moved over to the private banking discovered that there was a limitless possibility. And for the life of me, over 30 years of this type of planning, I had to be able to answer the question, which is the fear question: when I retire, am I going to outlive my money? I don't care how much they had. That was the number one fear. When I retire, am I going to outlive my money? Because they admitted they're going out of production. They're not going to be creating any more cash flow. And you can't do that. You can't run an economy that way. So it was always a reward not to work. So the opposite of that, Seth, is what is this abundant freedom oriented?
Well, it's enjoy your life now and create a life that you want to live now and have predictable money for retirement, but you can still utilize and create that velocity that we're talking about and that return on the cash that you're putting to work in your private banking economy. And it's not stored up for some rainy day. You're able to actualize and realize it now.
So let me give a little picture on that. Picture a small town. There's a bank in town. You own the town, in essence. You own the bank in town. This is what we're talking about in abundance. Pretty soon, town has maneuvered itself so that it is attracting far more money coming into town than is leaving town. Okay? And when a town does that, it really prospers. And people can live on that. They can live the way they want to, do the things they want to do, but they're still operating their town. And that's what we're talking about here, folks. Switching from working from someone or even working from yourself, which is still for the government and the banks, to operating your own private system that creates no taxable events.
And that's a huge one right there, is that this growing and compounding without any taxable event as you use your money, as you pull it out, as you buy the debt, and then as you ultimately take it out in retirement or as it's given to the next generation, there's no tax consequence there.
Absolutely. Another product of financial planning is everything lives and dies on interest. It's all about interest. And that's wrong. This is what got me so angry. I was very good at this. We were really good at this compared to the national money management firms all over America. We were really priding ourselves here. But this was the focus. It was all about interest rate returns. And this is not how wealth is built. This is how interest rate doesn't pass on. The alternative, it's from living only on interest to using and replacing principal?
I mean, what comes to mind right now is how interest rates have moved up and it created like a housing freeze. I mean, people can't move out of the house that they have and buy an equivalent comparable home because of the interest rates. If they're locked in a mortgage rate that they had pinned at 3 or 4% over the past 5 years at all-time lows, and now they have to, and that's ticking up a point or 2 points, their mortgage payments for the same type of house will almost double. So when you're locked into that type of mentality where it's interest rate driven, you're very limited in what you can do. And the same thing would be for anything that you're going to finance, unless you're using your own financing entity. We're not interest rate driven. You're actually the banker and you want an interest rate that fits within your means, but as high as possible. So, especially when it's tax free and coming back into your control. You want to be able to live within your cash flow, within the money that you make, but within that, it's not an interest rate driven mentality.
Yeah, I agree with that 100%. Another philosophy of financial planning compared to what we do is money stays still. Literally, I learned that you put the money asleep. When you have to leave money in an account to earn an interest rate return, that money is asleep for you. It is not working for you. It's working for the individual who has the money. Okay? Versus, what's the opposite of that, Seth?
Money moving and creating velocity, right?
Yeah. So this is why lending companies lend money, is to get this velocity and volume. The velocity means every time a dollar has absolutely no value until it moves, until it trades hands. Okay. And it's a touchdown. It goes up in the air and it touches down. And so the velocity means how many times can I get it to touch down in a year?
Right.
Because every time it touches down, it's going to create another dollar's worth of product and services. The volume then comes into, can I make that circle and keep adding more and more and more money and lending more and more money out there to increase my cash flow return into me? That's the secret. That is the difference. An age-old strategy that has never been updated. You know, our country was really blessed with a strategy to make it so powerful and so strong, faster than any emerging company in history, based on this strategy.
It's more of a scarcity, poverty type mentality, saving for education and emergencies and retirement, and the someday type mentality, and always saving. We talk about that in other podcasts about the fallacy of saving cash and buying everything cash, and how that is a flawed paradigm, a flawed model. Spending the dollar for one particular purpose, and then that purpose is met and your dollar's gone and you can't use it again. Whereas opposed to the private banking strategies paradigm, we've got much more robust application and use of the money. We're able to use it for more than one thing, have multiple touchdowns for the same dollar in a year, and being able to use it for multiple and flexible purposes as opposed to one purpose only.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue, but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
You see, in America, we don't even know we're slaves to the system. The banks have us so brainwashed in what we should do, and I called it, and I've called it this for a long time, get back to zero strategy. I practiced it when I first moved to Texas, and I was saved up for a car. I could buy a brand new Chevrolet for $25,000. I went into the bank, said, give me a check, I'm going to go buy a car. So it took me a couple of years to save that up. I took the money and went and bought the car. Where does that leave me, Seth?
Back at zero.
But I got a new car, but
Right.
the car's going to wear out, isn't it?
Right.
So when people say to me, when they do this very same thing, well, I don't have car payments. I laugh and say, liar. You have to replace that car eventually. So you're either going to have to take more money out or whatever else. So the alternative is go in debt and then make payments, and then when you've got the car paid off, where does that leave you?
Back at
Zero. There's a better system, folks, rather than spending money, having to go back to work. I've done some calculations for a lot of people. It could be as much as 25 to 1 to replace a dollar that you spend if you have to go back out into the workplace using your car, your wear and tear, your time, making everybody else profit, paying Uncle Sam just to get the dollar back so you can spend it again.
In the financial planning paradigm, the planner is the expert. They have all the control, and you lose your autonomy and ability to make decisions that you know about.
And I found that a lot of people like that. A lot of people, I'm not smart enough to deal with this. I'm going to give it to someone else. And anybody can say they're a financial planner. Seth, you and I know in this banking world that internet, YouTube, and everything else is just full of stuff, products that claim that they can do the infinite banking or whatever else. And I call it pornography. But anybody can say that. I had a scale that I would teach my clients, and I would prove it to them with my own expertise. On a scale of 1 to 10, a 1 doesn't even know what the topic is. A 10, there are no 10s. That guy walks on water. So 1 to 9, so to speak. A 5 is somebody who knows enough that can start using his expertise, to help other people and get paid a little bit. But he thinks the problem with the 5 is they think there's 7, 8s, and 9s. The 9 will tell you he's a 5, but he's the guy that the 8s and the 7s go to for counsel and help and everything else because he has the most time in and the most experience. That's what you're looking for. You look at somebody who wants you to do this and that on a portfolio. You ask the individual, how much does he make? The life insurance agents out there, the average means for life insurance is less than $50,000 annual income. Okay. And these guys want to solve issues for $500,000, and up dollars. You need this, that, or the other. To me, that's hypocritical. What's the alternative to the financial planner being an expert, Seth?
Implementing your own private banking strategies where you are empowered as the banker. You make the decisions with investments that you're comfortable with, that you know about. For some people, that's real estate. For some people, that's widgets. For some people, that's, logistics. Another person, it may be automobiles. And they apply their trade expertise and empower themselves to manage their own financial kingdom, so to speak. And money can be simplified. It's not something that is overly complicated, that people should relinquish their control to someone or supposed guru, like you said, and then look back and go, wow, I should have never done that. They should take control of their own finances and implement strategies, like I said, that they're confident with. So money can be demystified with private banking strategies, and that helps build financial confidence. Our clients have financial freedom, financial confidence, and control over their wealth.
What's really scary is that our clients know more about how money works than their professional brokers that they used to have and their financial planners. They still have not discovered how money works. They think they know, and that's the problem in America. And Nelson Nass's book describes that in what's called the arrival syndrome. Hey, I've been there, done that. I know all about that. Well, we all think we know something about money. We need to understand we don't. Not only is our next financial decision going to be wrong, it couldn't be worse wrong. It's 180 degrees wrong because we're programmed to give our money back to the banks.
Absolutely. Yeah. So, I think it definitely clarifies the difference between a financial planning paradigm and what we do at Private Banking Strategies. And if folks want to learn more, you can find us at www.privatebankingstrategies.com. That's privatebankingstrategies.com. And on our website there, you'll be offered a free book that Vance and I wrote entitled What the Banks Don't Want You to Know. And that book highlights some of these issues and many more that act as a red pill to folks who are new to these ideas and these concepts. And also, we've got all of our podcasts there on the website that you can listen to for free. There's content on every type of subject matter that you want to understand with private banking strategies. We've got other resources and materials and articles. And if you've done that, if you've read some of the emails that we send and these things are resonating with you, you've listened to some podcasts, you can schedule an exploratory call with Vance and ultimately create an 8-year plan to see how private banking strategies will work, particularly for you and your family. So that's our roadmap. That's our process.
Did that story feel like it was about you? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Thank you for listening to the Private Banking Strategies Podcast. Click the subscribe button below to be notified when new episodes become available.